Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Hello, this is Aaron Edwards with Santos Springs. It is May 14th. We had the USDA report on Monday. Friendly trade on beans, rough trade on corn. We'll go over all those details in just a minute. Before we do, we always want to have that bias towards action. What should our customers be doing? Especially now you guys are busy in the field, making sure you get in a good crop. So let me just start out with the call to action for this week. Click that box, no action recommended, no action recommended. I believe this is the fourth week in a row that we're with no action recommended. And let's go over that, kind of what's the thought process behind that. Certainly we've had movements in the market, so let's take a look at that. And before we jump into the market analysis, well, I guess it's already partially market analysis, but let's just talk a little bit about planting and weather and get started with that. So let me pull up a marker here where you have corn, and we can get ourselves a yellow marker there for corn. All right, good deal. First thing I wanted to point out is, as of Sunday, 62% of national corn was planted. That is ahead of the 5-year average. I'll circle that, 56%. It's also ahead of last year. If you remember last year, well, I mean, you guys know better than me, depending on what region you were in, but middle of May, we kind of got a little bit of a hiccup there with planting. So we started off real strong, and we got a little bit of a hiccup with planting last May, and that actually gave us our best price of the year, was right around the middle of May last year. So far, we haven't had that hold up to planting. Planting has been going great. Also, if we look, we'll go over the weather in just a little bit, but several states have been able to plant, really go from, somewhere in the mid 30s to somewhere in the mid 50s, or here we see Indiana, that went, basically, if you want to look more or less 20 percentage points, a lot of states put that in last week. So if we want to think about capacity of planting, there's a lot of states that could put in 50% of the ground in a week pretty easily. Just keep that in mind as we look here at the beans, and then especially as we look at the weather. So beans, similar story. Let's go grab a green marker. 48% planted as of Sunday. That is well ahead of the 5-year average, well ahead of last year, which are at 37, 34 respectively. Also, a lot of regions were able to really put in 15 to 20% of the crops, or even better. Grab that blue. So if we want to think about more or less than 15%, we get quite a few of them in that range. So it's not all of them, but a lot of states really got a lot of ground planted last week, right? All right, now I wanted to talk about weather, and I just wanted you to kind of keep those numbers in mind. So the first thing with weather, this is, World Ag Weather. I really like their website. If you don't use it, it's a nice handy tool. There you go, World Ag Weather. But this is, it's cutting off the title. Let's see how I can. This is observed rainfall over the last 7 days. So the title isn't showing up too well because I'm trying to mark it up. But this is observed rainfall over the last 7 days. 2 ways to look at this. Southern USA, plenty of rain, then we'll go get red. The northern Corn Belt is dry. Now, you can let me know if you're, especially in that dry area, how much rain you need. It's very hard to look at a map and know exactly what field conditions are like. But I think it's fair to say, just even from hearing for some of you guys, is the sentiment is like, yeah, the crops, they could use a drink. Not the end of the world, but it'd be nice to get a little rainfall. If you do have a more critical situation, or just throughout the growing season, feel free to email in updates on your ground, what weather's like in your neck of the woods, pictures, and if you don't mind me sharing those pictures, not only customers in the U.S., but also Brazil love seeing those pictures. So I'm not trying to give you work at planting, but we always want to know what conditions are like in the field, and that's good. So that's past 7-day precipitation. That's observed precipitation. And then let's go look at forecasted. If you go out to the 1 through 7 days, so if you go spot by spot, the map looks a little patchy. But if you just say over the last, what's the expected rainfall between now and 7 days from now, most of the Corn Belt is expected to get some rain over the next week. And a lot of that is kind of this upcoming weekend. So there's spots where it's not, but a lot of that's this upcoming weekend. The reason I wanted to point that out, we'll just scroll back real quickly here. If corn's at 62% as of last week, they can plant, you can plant 20% a week, and most of the Corn Belt is somewhat dry, but there's a little rain expected. I don't think it's beyond, if you say, Aaron, what do you think planting will be next week? I'm guessing somewhere in the 70s, maybe even over 80% planted. That's my guess. National, maybe 3/4 of the way done. If I were to guess, that would be my guess. We'll see what happens. And then the same thing with beans. Beans are 48%, basically halfway done. I think that they might be close to 70%, anywhere from 65 to 75% planted as of next week. So obviously, you are the experts in your area, so feel free to let me know to what extent you agree or not with that. But all that's to say, we'll be looking at 20th of May and being most of the way done with planting, and who knows what weather we have, but getting in that last 10, 20% when you have 10 days left in May, and you can still maybe cheat into June a little bit and still have good, be well within your window. I'm not overly concerned about getting the crop into the ground on time. I think that the market isn't overly concerned about that, because basically planting is so far ahead of schedule that even with a little bit of bad news, we'll probably still get the crop. And what I think is a more likely story is if we get a change in the forecast and yeah, it could use a drink, and then all of a sudden forecasts change and we don't get these rains, and then you have coming into next week some complaints of dryness. I have not heard too many complaints of too much dryness. So again, let me know in your neck of the woods if that resonates or not. And then so let's just, before we jump into the analysis, just the philosophy. If you're watching this in real time, we have worked on a grain marketing portfolio, kind of laid out your annual needs, preferences, how you move your grain, both financially, logistically, what your needs are. And we've tailored that into a portfolio. Then we look at funds, we look at seasonality. Seasonality is a big part of what we do, and technical analysis. And then on top of that, we build out the action plan. So let's jump in. We will go over the bean market first and the corn market, and then wrap it up with a summary. Okay, here we go on soybeans, and let me get a marker. We'll hit blue. Blue, there we go. All right. Managed money for soybeans is still long. So if we're above zero, that means the total long positions held by managed money or speculators is bigger than the total short position. A simple way to think about that is that the soybean prices are artificially high. And if that is negative, if it's below zero, soybean prices are artificially low, right? So what's been the situation? We have speculators that are long soybeans, but just a little bit. They're not up at those excessively long levels. It's kind of off the charts, but they're not way up at that high level of speculation where it would say, hey, let's go ahead and sell, because they don't usually hold positions this long. They just kind of a small long position. For reference, we're looking at 50,000 contracts here. When they got negative down here, they got negative 150,000 contracts, which in all fairness is really heavy. But we kind of want to see them, 50,000 contracts one way or another. It's not the end of the world. Once you get 100, 150,000 contracts, then that's a bigger deal. So it's not enough to justify aggressively selling. Another way to think about it is speculators could still lift the market quite a bit, they still have quite a bit of dry powder to keep raising the soybean market if they do choose to continue buying. So that's a big question. Will speculators keep buying or not? There's what's called a golden cross. I'll just explain it to you here. For some of you, this might be known. For some of you, it is not. That's the 200-day moving average. So this line right there, that is the average price of the last 200 trading sessions. Roughly speaking, it's the average price of the last 10 months. And then this line down here that is more responsive, this is the 20-day moving average, the average price of the last 20 trading sessions, roughly the average price of the last month. So when you have the 20-day trading below the 200-day down in here, basically you're saying historic prices are above current prices, right? 200-day moving average. The average price of the last year is above the average price of the last month. So basically that's saying it's bearish. It's bad news. Current prices are below average prices last year. When you get that cross, when you get the 20-day moving average crossing the 200-day moving average, this is called a golden cross. That means it's saying, wait a minute, all of a sudden monthly prices are above historic prices for the last year. Is there something going on that would make buyers be willing to pay more than the average price they've paid the last 10 months? So what we're experiencing right now in the soybean market, this is the July contract, is a golden cross. What you would typically see from that type of behavior then would be a rally. We're just barely into it.
like everything with technical analysis, oh, it was a failed, indicator and it didn't quite work. And if we're looking at beans, we really want the technical indicator of the golden cross to point towards high prices. In just a little bit, I'm going to talk about corn, and I'm going to want to, if we're going to cross our fingers, say, hey, I don't want the technical conclusions to guide us. Truth of the matter is, technical analysis is part of what we do, but especially during spring planting and just weather, during the growing season, you really have to take technical analysis with a grain of salt. So cautiously optimistic beans, it is a golden cross, but let's look at the November contract before we get too excited about that. So here's the November contract. The November contract has not quite gotten that golden cross. We're not quite there, right? This is the 200-day moving average. I mean, hopefully, end of this week, beginning of next week, we'll say, hey, we got a golden cross. This is friendly. But last time, when we tried to come up here and it failed. So if for some reason it's not really what I expect to happen, because we've already had 3 strong trading sessions, again, overnight trade today, higher highs, even though it's down a little bit, higher highs for the move, not compared to historic. Also, generally speaking, right, it would be very abnormal. Markets do abnormal things, so I'm not promising a crystal ball, but it would be very abnormal for this September-October rally, September-October harvest, a harvest rally, for a harvest rally to be higher than spring prices. That would be very abnormal. Even if we go back, well, in 2013, markets really took a hit. Okay, even then, that rally was like Thanksgiving. It was after harvest, and there were weather concerns in Brazil, and that's what took the market up. So it's possible that the harvest rally for new crop beans last year will have been the sale opportunity that we should have been aggressive on. Historically speaking, if you're really aggressively selling at harvest, like we would be talking about selling, September, October of last year, aggressively selling the soybean market this upcoming year, that strategy usually does not work, right? The exceptions are when you have absolute crop failure, like 2012, and then you have just huge prices, just kind of this over-the-top bullish sentiment. That's when maybe you want to sell harvest prices aggressively. That was not the case last harvest, right? Last harvest, nobody was too excited about prices last harvest. So I guess maybe this is too much optimism on my part, but over the course of my career, there have been many more times that I would have been right to wait for some type of spring opportunity for higher prices. Is that, do we just challenge the $11 mark? Do we get to $11.20, $11.40? Can we get up to $12? I don't know how big of a rally we can get, but we did get a golden cross. So let's not get blindly optimistic, but it's the middle of May. We've had perfect planting weather, perfect, so to speak. And we got a golden cross. If we get any hiccup, I think there's a shot we get a rally. Let's turn that off and go get ourselves an image on corn. There we go. Going over the corn market. All right, similar situation here from just the position of the funds, but I do want to point out, let me grab the marker and we'll do red. All right, there we go, red. So corn back in February when we were selling new crop and we were being a little bit more aggressive, corn did get up, 300,000 contracts long on the corn market. When we got that rally, there were speculators saying, hey, this is way up in the skies. And that's part of what justified us making sales back then. In hindsight, right now, I wish you'd sold a whole lot more, but the crop year is not over. That's something that's important to remember. We still have time. What is a little bit of bad news is if you want to look down here at the current position of speculators, that's the smallest long position for speculators. You'd have to go back to November of last year when they just started finally buying corn again after basically almost all of 2023. So speculators were basically short the corn market the entire year of 2023. Finally in November, they start getting positive, and then we get a nice rally into February. Well, almost all of that optimism has been drained out of the market, and there's as of last Tuesday, not yesterday, but a week ago, they were still positive. This Friday, we'll get the upcoming report, and maybe they'll have flipped to negative. So basically, speculators are out of the corn market, or very small long position. We'll see where they're at next week. And this sell-off that we've had from speculators, we could see that in the corn market. The corn market looks much more bleak than the bean market. So same basic situation of the 20-day and the blue. There we go. 200-day moving average, and then here we got the 20-day moving average. Lost support, and then there's two more kind of bad news patterns that we've seen in the corn market. A key reversal is when, a key reversal down is when the candle shows the high-low open close, right? So when you have a candle here, and then, so this is yesterday's trading session, and then in the same session, you take out the high, you take out the low, and you close down, that's a key reversal down. Basically it's saying, hey, all of these orders from last trading session, we've worked through all of them. We've even tried to get higher. We couldn't get higher. We've gone lower. We pushed it lower and we closed lower. That is a key reversal down. Same thing if you want a key reversal up, so they took out the lows from the market, took out the highs, and they ended up higher. When in the same trading session, you take out the lows, take out the highs, and then the direction you close, that would be the key reversal. We got two key reversals that would be down, pressuring markets. So one of them was on the July contract, one of them was Monday's trade, and the other one was last Thursday's trade. It'll be a little bit crowded here, but let me see if I can point those out. I'll get black. So this was a key reversal, and then this was a key reversal. From a technical standpoint, all of these things are really bad for the corn market. Losing the support of the 20-day, losing the support of the 200-day, key reversal, then 2 trading sessions later, another key reversal down. That is a really bad technical signs for corn. Planting is going well in the corn market. So here's what's tricky about it. Is this a corn market saying, hey, you guys planted a good crop, I'm sure you'll raise a good crop, we're done, you don't get a spring rally this year? Is that what the corn market's saying? No spring rally, party's over, I gave you a shot in February, take it or leave it, that's what you get. Maybe that's a possibility. The other possibility is what's called a bear trap, right? Where a market is down in the dumps, it gives you all the signs that it's going to just absolutely collapse, and then it just basically washes out all of the weak long positions, and then speculators come in and scoop it up lower, and if we get any hiccup in the market, they just got as good of a buying opportunity as they've, last time we had a buying opportunity this good was like December. So is this a bear trap where, speculators are just looking for an opportunity to jump in and buy corn? Or is this actually kind of we didn't really get a good spring rally and markets are done and corn's over? It's really tough. Are beans going to pull corn up, or is corn going to drag beans down? What's going to happen in the field? A lot of uncertainty in this market. I do want to point out new crop corn. The chart looks very similar, but it's a little bit less dramatic, so to speak, from a pricing standpoint. A couple of things. So let me grab the black here. All right. Lost the support of the 20-day, that's the same. Lost the support of the 200-day, that's the same. I'd have to go back and triple check, but I am pretty sure that there are no key reversals. So we did not get any key reversals in new crop. Also, it's important to acknowledge that here on the new crop corn, we didn't really get the same rally that we had. And this has been a pretty good value area on new crop corn. So we'll say, maybe 440 or 435 through about 450. So yeah, we had some rallies, but we're kind of in this box where we've had fairly similar values for a long time. So is new crop corn just gonna get destroyed here? Maybe, but every time it fell too much below here, it bounced back pretty well. So it could happen, right? It could be different, but just for perspective, at this price level, speculators were incredibly, at this price level here, speculators were incredibly short the corn market. So maybe we just absolutely get this pressure downward. But I don't think too many farmers are excited about forward pricing in middle of May, cash corn prices that are maybe barely $4. So at some point, you kind of run out of sellers in the market. Farmers will say, hey, if I need to sell, 397 corn or whatever, I might do it. I'm not going to do it with planters rolling in perfect weather in the middle of May. You're going to have to, you're going to have to pry that out of me with the calendar or because I need cash at harvest. I mean, if I'm going to make a sale that I'm not even sure turns a profit, I'm sure not going to, jump up and lift my hand and get that done in the middle of May. So I think on new crop corn, I think we might have some degree of protection just because of the sheer price level. The July corn will be a little bit interesting. So again, we always want higher prices for farmers. So part of me is like, let's really trust technical analysis. We got a golden cross on beans. We're going to the moon. Part of me is like, technical analysis doesn't matter much because it's not going friendly for corn. The big picture item and the action is what pays the bills. No action recommended. Why? Because generally speaking, selling into a market where planting is ahead of pace and there's rain forecasted and all the expectations are it's going to be a great crop, generally selling into that scenario is not the right headline. A better headline is, I might have to replant my corn, or I might have to replant my beans, or man, it's dry and there is no rain forecasted, or there's been surprising demand. Speaking of demand, and I should have mentioned this at the beginning, the USDA report was actually friendly on ending stocks, both 24-25 crop and 25-26 crop. Ending stocks expected to be a little tighter for corn and soybeans in the U.S. Globally, we got our first number on 25-26 ending stocks, so we can't compare it to previous month because we didn't have that number, but we can compare it to market expectations. And globally, the 25-26 crop is also expected to be a little tighter for both corn and beans. 24-25 global crop was unchanged ending stocks for corn and 1 million metric tons more for beans, but we've known about a big crop out of South America for a long time, so I don't really know that that's a significant factor. So With let's go to the summary and go from there. Seasonal. Corn is seasonally a sell. It's May. Soybeans are seasonally a sell. It's May. Managed money. Corn is long, but not long enough to sell, so neutral. Beans are long, but not long enough to sell, so neutral. Corn is in a downtrend, not looking good at all. Beans are in an uptrend, really couldn't be looking much better. So something's got to give. We'll keep a close eye and see what it is that that does give. I do also basis levels. Let me record this, then I'll make a comment about the corn and soybean ratio. In the Eastern Corn Belt, for the most part, basis levels are slightly above historic averages for this time of year. In much of Illinois and further west, basis levels are slightly below average prices for this time of year. Seasonally, we would expect an increase in basis moving forward. Current basis movement is a little tricky to track, as many markets are switching from May contract to July contract. Soybean technical indicators could not be much better, The July contract showed a strong golden cross. The new crop contract seems close to also having a golden cross. Corn technical indicators could not be much worse. The corn market has lost the support of the 20-day, the 200-day moving averages. Also, July corn had two key reversals down in the last week. And the final thing that I wanted to show was the corn to soybean ratio. So if you divide the price of new crop beans by the price of new crop corn, a lot of people have a number that they say that ratio has to be 2.4 or 2.5. My opinion is that ratio tends to be comfortable within a range. And I even give that a pretty wide range, which is 2.3 to 2.7. I've seen it spend a lot of time at that. If you get outside of that range, it's been my experience it tries to come back in. So if you say, hey, pick the right ratio for it, I'd probably say somewhere between 2.4 and 2.5. But 2.3 to 2.7 is what I consider kind of a normal range for that. If it gets down lower to 2.3, then you would expect beans to gain on corn. If it gets 2.7, you expect corn to gain on beans. The beginning of March, that ratio was down at 2.2-ish, 2.22. And as of today's trade, that ratio is back up to about 2.4. So this whole weak corn, strong beans, all of this trade to some extent has just kind of brought that ratio back to normalcy. Where do we go from now? I sure hope we go higher. There's enough headlines ahead of us. It's not happened yet. If you're chomping at the bit saying, I've got to sell, I'm behind the 8 ball, and Aaron keeps saying no action recommended, but I'm really nervous about this market, I will be disciplined in making sure that we make sales in a timely fashion, but it's May 14th. It's not, June 14th. It's not the end of June. It's not July. So markets can change fast. I would love it if we saw, beans keep going up and then corn just to be a bear trap and we just go rally for 2-3 weeks and then we get a tremendous amount of work done. I would be thrilled about that. I think it's possible. Let's all keep our eyes on the weather. As long as there's Goldilocks, perfect, enough dryness to plant, enough rain to get a good crop, that's going to be tough to come by. But weather changes, markets change, conditions change. Right now, it's looking pretty good, at least from a trader standpoint. If you're watching planting progress and weather, it's looking pretty good in the Corn Belt. If that's not the case, let me know. Boots on the ground. If it's different for you, let me know. So that's it for this week. Let me know if you have any questions. Be safe in the field. Hope you can wrap up, not for the sake of the market, but for the sake of your operation. Hope you can make great planting progress again this week and go from there. So be safe.